Hey, and welcome back to a new video. Today I want to talk a little bit about market and trend structure and also explain how different types of market tops can look like. So for that we are on the Euro USD 4-hour chart. The 4 is my preferred chart as it's a great compromise between the longer daily time frame and the too short hourly time frame. The signals are usually very meaningful. And one thing I always recommend is that you not worry so much about the broker closing time, as long as you just stick to one broker and one feed and don't change and mix things up. And as long as you make consistent decisions, this is usually good enough and no reason to worry about closing times from your 4-hour candles. So we will just go through the Euro USD 4-hour chart and scroll through it, and I will show you how different market tops look like and how you can analyze trend structure in a very nice and easy way. So let's start here on the left hand side. We had this trend structure was very typical. It's the three swings during the trend we can see very clear and nice. You can see the first one was very strong, then the second one a little bit less strong. We had more pullbacks in between, and then the final wave was very short if you compare it to the other two, and afterwards we had this sell-off. So this is the what I call is the swing market top, because you have those very clear swing types, and as we will see later, some market tops will look very different. So this is the preferred top and market reversal that I trade, because this is very obvious. You can see the divergence obviously here, which makes sense because we have those swings which become less and less strong, and obviously then your RSI will go down because the RSI measures momentum, and when the trend waves become less strong, then the RSI is less strong as well. And what is also very important, this is the main principle for all reversal trades, that you don't look for reversals after the first trend wave. So although you see that price tried to reverse and went lower, this is not a tradable entry because it's the first trend wave, and the first trend waves have a much lower likelihood of leading into a strong reversal that in this case could give us a long short trade. So always stay away from those first trend reversal waves. Then here we can see on the second wave we try to break this moving average in purple. This is the 20 period moving average, which I highly recommend using if you are a reversal trader, and even if you're a trend trader, the 20 period moving average is a very great tool, as we will see later as well. And I use the 20 period moving average as my tiebreaker on my trades, so I only take trades in the direction of the moving average. So as long as we are above the moving average, I only look for long trades, and I only look for short trades when we break below the moving average. And in particular when we are trading reversals, then I look for those trend structures, and I only enter a reversal trade after a strong break of the moving average. So in this example, even though we had here the second trend wave, which could have given us an entry, we can see here very clearly that price rejected this moving average very strong. Price tried to break it and then left this huge wick and rejected this moving average clearly. So this would never have given us an entry because we never closed below the moving average. Whereas here on the third trend wave, we can first see that we have those wicks here at the top, which are rejection signals. Each wick shows that price tried to move higher, but then the sellers stepped in and pushed price lower. Then here we broke the moving average with a very large and red candle. We would have entered here on the short trade and could have ridden this downside reversal very clearly. And this is the first and clearest trend reversal swing pattern that you will see over and over again. You have those multiple trend waves, which become smaller and smaller. Then after the third or second wave, you have often this reversal signals here in types of the price action rejection. They can come in the form of pin bars or engulfing bars. And then the final clue is the reversal and the break of the moving average. and then price would have moved lower. You can see already this is a very different type of structure here on the trend. So price just grinded lower below the moving average, and you can see price always respected the moving average. Here we had a short violation of the moving average, but nothing major. Price quickly went back below it, and then here this is the what I always call is the rounding pattern and the rounding reversal. It is similar to what has happened here, so there's nothing wrong with taking a trade here. You can see that price broke the moving average here with this candle. This could have given us a long entry, then we would have taken a loss here. Once price broke below the moving average, it would probably not have been a big loss, but nevertheless, not all reversals work out, so this is something you have to keep in mind. And then here on the downside, we see this rounding again. Price tried to push lower, but then here we saw that the momentum was fading, and then here eventually price broke it with a strong green bullish bar, and we then moved high into a new rally. The next you can see you have those very large green candles. They are probably caused by news events and other news related spikes. So what often people do, especially when they are looking for reversal trades, is that they think, okay, after such a big candle, price is or has to reverse. It is true that sometimes price does reverse a little bit, but those things are not tradable. When we talk about reversal trading, those are just pure gambling entries. When you see such a big candle and then you hope that price is going to recover some of this action. So I always recommend, if you see such a big candle, then you stay away from the market until you have clear signs again. And this is something that we will explore now in the current Euro-USD situation as well when we move forward. Then we come to the third type of reversal and market top pattern. After the swing top and the rounding top, we have this parabolic top, which are often called V tops and V bottoms. You can see price just shoots up in one straight line. When we zoom in a little bit, you can see that price always trended close to the outer Bollinger Bands, which is a very strong signal, because the Bollinger Bands, they measure momentum and volatility. And if price stays close to the outer bands, that it means we have very extreme and strong trending behavior, and that price is a very high momentum trend. When we compare it to the swing market tops that we analyzed first, we can see that the entry is not as clear here, because you just shoot up in one large candle and then price reverses immediately. So this is very hard to catch, and here it is even more important that you are patient, you don't try to call tops and bottoms, and you still wait for the break of the moving average. Because as you can see, a trader who only enters trades after we break the moving average, he is not able to pick the tops and the bottoms because price has already reversed quite a lot. Whereas traders who always try to pick the bottoms, they will probably enter somewhere around here as well, and then they get burned a lot along the way. Whereas the reversal trader who is waiting patiently for the break of the moving average has his patience, and he only enters after he sees the confirmed reversal already, because at this point when we broke the moving average, we already saw that sellers are now controlling the markets. At the same time, this is a very interesting pattern that we can highlight here when we zoom in a little bit more. You can see that once price broke this moving average, we never had a clear and strong momentum candle like before, but price just hovered around sideways. We had a lot of wicks and there was a lot of fighting going on, and then eventually price broke below. So although I would have probably entered here on the break of the moving average, this would have been very challenging, but this is not a reason to enter a reversal trade as long as we not close above the moving average again. This is a very natural and common behavior on reversal trades, and often you can see that when price breaks the moving average, because it's such a commonly used market tool that you have a lot of fighting going on, and as long as price stays below the moving average and stays in your direction, you are still good to go, and you should not exit your trade. Only when price shows clear signs that it's violating the moving average. And now we come to the newest scenario on the Euro-USD. This is again another type of reversal trade, And when we combine it all and when we put it all into perspective, you can see that I now just introduced 4 or 5 different types of market tops and reversals. And they are all based on the same principles, that you are looking for signs that market is transitioning from a bullish to a bearish phase or from a bearish to a bullish phase. You're not hunting patterns like a template like so many people do with pin bars or other candlestick formations, but you are trying to make sense of price and price movements in the overall context, and then you look for clues that markets is really shifting and going into a new direction. So in this case we have this long candle here, which was caused by the NFP on last week's Friday trading. And as I said before, you never just short after such a big candle, and this is the reason why. You can see price would have gone up a lot longer, and you would have been in your losing trade for a long time. And just seeing a large candle is not a reason to just short or go against this trend. But now we saw that price is now grinding higher just slowly, and this is what I call the grinding pattern, is where you see such a long move, and then price just barely moves anymore, and there's no follow through. Then finally on a few hours ago, we saw here on the Bollinger Bands that you have those multiple peaks through the outer band, which were always rejected. This was already our first clue that something is happening here, and this shows that price has not the strength anymore and the buyers are not in control anymore. Then the next clue came here after this long red candle. We broke the moving average. It's again very nice to see that obviously the moving average or price reacts very nicely to the moving average, and this was my entry here that I just took a few hours ago. I'm still short in this one. And so this is another trade where you can where you put everything into perspective. You have this long candle, then you have those this just barely grinding higher pattern where price is trying to move, but it's not able to find enough sellers to push price higher. Then you see this sudden injection of selling into the market, and here we had this follow through. Now price is a little bit struggling, but nevertheless the moving average is still up very far. And so how I would manage this trade, my stop loss is just here above those highs, because you can see there's a lot of support and resistance going on, and I always set my targets above such important areas, because you can almost always see some type of reaction, and I prefer to be safe on my exits, and I will hold my trade as long as we stay below the moving average here. And once we close above the moving average, then I will be out, because again, a violation of a moving average is always a very important clue that the market and the trend structure is changing in the pairs that you are watching. And those are the 4 or 5 types of different reversals and trending patterns that you will see over and over again in all markets, in all time frames. And knowing how to interpret all the different types can help your trading a lot, and it can help you make much more sense of charts.